Yo, what's up?
What up?
Points. Alright, let me share this real quick. What up, guys? Welcome to Trading with Emotions. It's been a little while for sure. What up, Joe? Brands, Mr. Simon, Devin, Nikos, Cameron, Chuck's son. What's up? God the Heavenly Father, man. What is good? Yo, 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 yo. All right, man. Let's do some analysis. What up? Damn, bro. You got me a little bitch. What? Why? I was on vacation for a little bit. That's why I wasn't streaming. So I wasn't home for about a week. So I apologize for that, but I'm back. I'm back to the grind, bro, with you guys. Do it all, man. That's what it'd be about. All right. The price is working again. Guys, Amy did the little Bitcoin. Invalid symbol? What you mean, bro? Yo, Bitcoin. How does it do that? Come on, dude. We're doing this right now. Of course. Fit it, bro. Fit it. Look at that. Look at that shit. Why? So, inconvenient, bro. We got our little Bitcoin pattern. And then right here, it's doing a little inverse. All right. So it's a little arc, right? Your typical Amy arc pattern, right? Except it looks a little bit like that. Comes back down. You're doing the whole fucking thing here. And then this is where, this is November, right? You guys remember the little projector we made in November and then we started to come back down? Okay, so that's where we are right here. But remember, when things play out inverse, we actually start going up here. So we'll see what happens here. Yeah, dude, this is a really strange setup on AMC, right? Because things are starting to like curl back up. So a couple of things could happen, and I'm gonna show you guys quite a lot today. Because again, I haven't been streaming in a little while, so kind of have to go over it all. Here, let me just take a look at this real quick. Yeah, Amy's starting to curl back up. That's good. All right, let's go on the 30-minute. Mats. I'm back for good, bro. I'm back for good, man. All right, so apparently if I go away here from the price window I got here, it just stops. It just completely stops. Okay, but Amy's going up, man. That is good. Good shit. Let's see. Look at that. Look at that. The SPY is going up too. Broke out of this little little wedge pattern, making its little projector up here, possibly coming back to bounce from the support or resistance trend line. Okay. And then this guy is right up here. So this would be one target down here, bouncing back up, or breakthrough and coming back down. All right, we'll come back to this. I want to go over something real quick. I was going to make a video about this, but might as well just kind of go over everything here. What are my thoughts with AMC here in the coming days? Okay, so we do have this support trend line down here. So for the weekly scenario, I did have AMC coming down here. Okay, early on at some point. I was expecting more of a trend like this, right? Where it just, there's no volatility upward or downward, really. Just very sideways pressure to the downside, okay? And then a bounce from here going back up. But we are getting that pretty early on right here. So my thoughts on this, we still have that point of interest June 15th going to the 22nd. I do believe we are going to hit $22 in the short term. So that is what we're looking for here. But I'll pull it up here. That's the first point of interest. Okay. And you can see right off the bat, we are creating sort of this inverse head and shoulders. Okay. I do think that today if the SPY is strong and does push to that 418, maybe possibly 420 level this week, then we would get this follow-up here, right? This inverse head and shoulders. And then right next week, come back to test this support trend line down here before bouncing again and hitting that level, that macro resistance on the yearly, right? That one is obviously it's important. We gotta cross that or bounce back down. Either way, it's the first step to that trend reversal, right? That we need. We haven't had confirmation yet, guys, and this would be that first step upward. Okay. This is another little thing I was working on here. It's called the. Let's see where it is. Here we go. Quad witching. This is really important as well. These are. It's about 2-3 days of these sort of like V reversal setups before that quad witching date, right? These are quadruple witching. We have one coming up here on June 17th. So what I see happening based off of this, right? That first point of interest we were talking about is the same thing. A little V setup before going back up and touching that $22 level, right? You have to remember that for quad witching, there's a lot of options in the money as well as out the money. And when when you're a hedge fund trying to hedge your position, you're gonna try and basically crush the entire option chain to hedge for the options that are in your favor. And I think here what they're trying to hedge for is the $22 calls and puts, right? Because these guys are playing on both sides, and that's how they make money, right? They're trying to get that delta to a neutral zero here. So that's my level. Again, from a macro perspective here, that's the trend line. It's coming back up here, hitting that, bouncing back down, and then going right towards the end of July is the first point of interest. If we don't cross that, then we know that the next one would be in October. I really believe that it's one or the other. I don't see how these guys can push this off for much longer. This is a red zone right here for them. It's a danger zone. You cross this level, guys, and this thing is gonna fucking pop. It hasn't crossed it, man, in a year. This thing is ready to fucking pop. So whenever we get it, dude, we could get it. We could get it end of June, right? I don't see that being the most realistic approach, but if it does happen end of June, that could be go time and this thing fucking pops, right? But if we get it in July, it would look a little bit better, I think. We were looking at the monthly chart for these setups. I posted that on Twitter a couple weeks ago, so you guys can get a better perspective, right? How the price action moves. And I think we all kind of agreed that August was the prettiest one, right? These guys would want to do here. But got your little projector, right? A little projector pattern. And I think a bounce here, that looks fucking sexy to me. What do you think, bro? I think that looks fucking sexy. So yeah, I'm expecting something like this. It'll be like a inverse head and shoulders right here on this setup, right? Yo. Something like that. Alright. Coos. Alrighty, Spy, what you gonna do? You gonna come back down here? Or you gonna pop or what? We're doing. Yes, and I will go over DWAC as well, because I do believe that there is a major point of interest. I did say this, guys, by the way, that, anytime that AMC is trading sideways, right, or like there's not a lot of potential in the short term, we do talk about other stocks, and that's just that's part of this. Like, you're gonna try and make money one way or another. We're not gonna stay on something that's trading sideways here and wait until it pops, right? It's the main priority, yes, but I will be talking about other stocks in between, because we gotta look at that shit too. Anyways, I'm tracking the cycle here on DWAC, okay, and there is a major volatility level right here within literally this week. I see DWAC either like spiking up or dumping very hard in the next couple of days. I mean, the sideways pressure on this thing, look at this. Where is it? Here we go. These guys have been able to keep this thing sideways here for quite a bit, okay? 16th. Okay, almost a month here of just stagnant pressure. And you can tell right off the bat, the volume is lower than it normally is. This thing is ready to pop, dude, one way or another. And when it does, I mean, the levels I'm tracking here are going to be the $70 level, okay? If it pops up, if it pops down, okay, I am expecting a pretty nasty dump to like 25. So, again, I don't know which way it's going to go, okay, because this thing it just has volatility signals on the cycle tracker, okay, and just based on the spikes that occur on time frames here, has to do with options and their expiration dates. Okay, there is a volatility zone right around here, right around the 9th. So, and that's tomorrow, right? So we'll see what happens, dude. But yeah, this is what I got for DWAC. Up or down, baby. Up or down. that. Amy's setting up for some sort of either rippy rip or consolidation back down. Let's see. Okay, so we got a double top so far. Will it cross the double top is the question. What is the SPY gonna do, man? Look at this, man. The SPY has been just trading sideways for ever since the 27th. This is nasty, bro. This is a nasty game here on the SPY. It's just, there's a lot of volatility, right? For months. And then this right here, like, how are they able to even do this? You know, just trade it sideways here. No fucking sense. Dude, the SPY, again, in the next 2 days, just like DWAC, like, it's gonna pick a direction, dude. It's either gonna fucking dump to 490 again, or 390 again. And then from here, it has the potential to keep going down. The level I was talking about a couple weeks ago, the lowest I would see the SPY going is 374. I don't see it going lower than that. If it does, then we are going to be looking at a potential, a little bit more potential downside to, you know, possibly that 350 area. If it does, I am bullish on the SPY in the short term. As far as, you know, the next half of the year, I'm very bullish on the SPY. So, you know, I do see it hitting all-time highs again. But, you know, if in the short term here, in the next couple of weeks, if it starts to dump, this might be that last, you know, that last level before this thing springs back up again and starts just climbing up, right? We do need really a move here today. It's just so indecisive, man. Make up your mind, right? Okay. Be right back, guys. I'm gonna get some water. Keep an eye out the charts for me. Yo. What up, bro? Yo. Also, something I noticed, okay, and this is just speculation, okay, is I like to compare the SPY movements a lot with any stock when I'm tracking their cycles, right? You got to do that because if something is going to happen, right, like or repeat itself, if a pattern is going to repeat itself, typically the rest of the market is going to follow a similar setup to what it did around that time frame, right? Even though they have different cycles on the micro, they do behave similarly. So something I did here with DWAC, right? So I was tracking the SPY with it just to see how it behaved, right, on these run-ups. So we got DWAC up here, we got the SPY down here, and they actually behave very inverse to each other. Like on DWAC, whenever it runs, you typically have like a SPY dump. Look, 1, 2, okay, 3. 1, 2, 3, on these run-ups. Look at this right here. This macro just fucking dump here on the SPY. And then a run-up on DWALK. What else? What about right here? 4. Look at that. 4. 5. I mean, dude. What the fuck? Okay, right here it's just kind of tracking pretty similarly. Okay, let's see right here. 6. Up. Where else? Down here? No. Okay, and then that's it. And then right now it's just trading sideways. So what does that tell me here? 2 things can happen. If there's a volatility zone on DWALK, and we start to get like a SPY rip, then I would think that, you know, DWALK is probably gonna dump, right? Because again, what this is showing me is that we have correlation here with the SPY going down and then DWALK doing the complete opposite, typically like pretty aggressively too, right? So whatever happens here, guys, in the short term, that's why I track the SPY, and I track every single day with cycles, because AMC and GameStop have the same thing going on. Okay, so there is nice correlation here. If I start to see the SPY dump, okay, what I've seen here is that 2-3 candles later here on the 4-hour chart, you will see a rip on DWALK. Okay, so the SPY comes down to, you know, 408 around there today, going into tomorrow, going to 400, right? I do see DWALK going up. Okay, it's just something to consider here, because I mean these are all pretty correlated with it, man. Like, look at how it happens. All right, this is September 30th. You have a SPY dump, it starts to go up, and then DWALK goes up, right? That's when it launched, so it doesn't really quite count there. But let's see here. 1 candle, 4-hour chart, you see the SPY dump, and then DWALK goes up. Let's see. Here again, the 5th, going into the 6th, DWALK goes up. Okay, this is a macro one, so I'm going to take it out. Right here is a smaller dip, but DWALK still goes up. Same here. Okay, this was a gap up and then dump. And then here, yeah, here is the macro. A little bit longer, and then this rips, right? So, what do you guys think? You think the SPY is going to dump or pump in the next couple days? I want to know what people are thinking. It's trading sideways right now. Pump. Yeah. Oh, AMC rip. Rippity rip. Ooh, AMC a rippity rip rip. A. Oh, baby. AMC is going up. What is good? Hey. Yo, let's rally, bro. Why is Amy going up? What the fuck? Oh, shit. Oh, shit. Amy. Baby, it better not be a fake pump. No fake pump right now. 5% up for the day, baby. Mac and Bees, what's up, man? I mean, yo, you know what this is? I mean, on the micro, this is a projector pattern. It is. However, so this setup actually reminds me a lot of the November run-up. of 2021. I'll show you guys what I'm talking about. So let's go on the 45. Let's see if it lets me pick this up. This right here. If you got, like, bro, if you guys fuck with this, it's very fucking similar. This entire thing right here. Obviously, in its own way, it's not the same ratio. This is a fractal. But it looks very similar, surprisingly. It's 2 projector patterns. It does happen. It is common. So, obviously, they look a little different, but I'm trying to show you the setup here. So what it is the same thing, right? You got your little pump, and then it just starts to dump very quickly. You create 2 projector patterns before going up. Now, I don't see this being like the scenario here. I'm just showing you the setup, how these little projector patterns work, right? It's a possibility, right? But I'm not putting that much faith just because you guys know how this works, right? You know that the price action, you know, dealing with smaller numbers, something like this would be more likely if the price was at, you know, $2, $3, you know, not so much at 13. Remember, volume is crucial with this. So the setup right now, we're still on a downtrend. We haven't established anything to the upside. Now, what this does indicate, however, is volatility, right? Because when you put fractals, when you calculate fractals and you see spikes to the upside or downside, those are considered volatility zones to track, meaning that something could happen, right? Could indicate that this would come back down, right, and test this level very quickly. Volatility, right? Come back down and then start coming back up. Or it could also indicate, right, a little bit of pressure to the upside. Maybe early on hit that level of 22. You guys have to remember that, you know, even though I'm calling for us to hit that level of 22 here towards the end of the month here, around the 22nd, you know, it could happen anytime before that. It doesn't have to happen on the 22nd. It could happen after the 22nd, right? Those are just, that is where the hot volatility zone is. So that's the range I'm giving it, right? This could just go up here in the short term and hit it, you know, before the 22nd on the 14th or the 15th. The blue pattern is actually around that range too. If you guys are tracking the cycle, you know how the cycle works. I'll show you. So here is the blue pattern. You guys know that the blue pattern is a reflection of the June run-up. And guess what? This is fucking June, bro. We're in June of 2022. And this is June 2021. So this right here is coming up. And typically this pattern follows through very nicely on every cycle that has happened. So this also goes with quadruple witching. Quadruple witching does come very close to that that level on some of these patterns. So I am expecting some heavy hedging being done around this range. And if we put this together with the first point of interest, no, not that one, this one, okay, you have the similar setup, right? Where right now we're right here in the cycle, right? Things are starting to come back up, potential to come back to this, you know, 1450 level, come back down again, you know, follow the blue pattern very similarly here for going up, right? Doing something like that. That is perfect. That is literally fucking perfect right there. If we do something like this, and then let's say we start fucking playing out this whole fucking portion here inverse, then this thing starts to actually climb and set up for the run in July. That would be ideal. That is what I'm hoping for. But we track this day by day, okay? This is not a let me try and predict when this is going to go up. No, it's let's track it day by day and see what it's doing, and then make new setups, new scenarios as things play out, right? That's the smart thing to do. That's the smart way to do it. All right. Spy needs to, like, make up its mind, right? Oh, wow. That's playing out very similar. That setup. Everything else was basically inverse. This whole thing right here was very, like, completely inverse. And then it started to play out identical right here. Same with this. It's crazy how the cycle works, dude. It is so fucking crazy, man. Look at this. Like, what the fuck, man? When this thing, like, this is the part that is so confusing to me, because, like, this portion, dude, it happens to just... Well, it's not confusing, it's just, it's part in the cycle here that tracks super, super identical here on the, when the dark pools are working overtime, right? So I like to say that this section here always plays out, how these hedge funds want it to, man. Look at that. Like, same fucking thing. And it's typically followed after either a macro run-up or a micro run-up here, followed by just selling pressure, is when you see that playing out. But when the algorithm can't stop the volume and you start to see inflow in volume, it behaves very different in the cycle. That's why I always tell you guys, like, track the cycle if you are tracking it. This right here, until the blue pattern, right here. Track it using the cycle curve. So cycle curve is way more accurate on the macro. And on the micro, it's really hard to track. You know, on the 30-minute, it's really hard to track this portion in the beginning. Every time I see you in the world, you always step to my girl. Oh, fuck. Well, oh, is the price action frozen again? Dude, goddamn, come on, bro. Okay. We're going up. Spy's going down. Weird. Okay. Interesting. Amy's setting up for a nice, yeah, potential rip to that 1450 level. Oh, fuck. Oh, shit. Yo. Yo, Amy. Yo, Amy. Yo, I think Amy's ripping. Yo. Bro. Alright, let's rally. Let's rally with the family. Alright, we need to rally with the family. What the fuck is going on, Amy? An animal. Throw the elephants in the chat. Throw them all in the chat, bro. What the fuck? Yo. $3.95. Yo, let's go, Amy. What the fuck? Get it, get it, get it. Ha 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 ha! Amy! Amy, what the fuck? $13.96, and she's going. $13.99, 14, about to get there. Holy fuck, GameStop, 151. Holy shit, I hope I'm wrong, baby. I hope we fucking go up. Let's go. Let's go. Look at the nasty elephant trunk we got going on here, guys. Look at this fucking elephant trunk. If I ever knew one, baby. Look at this shit. We're gonna draw some elephant trunks right here. Alright? That is one elephant trunk. Yo. Come on. Give me that shit. There you go. Elephant trunks for days. Oh yeah, oh yeah, oh yeah. Oh yeah, baby, come on, get it. Let's go. Wow. You know, I should be paying attention to the price action, but these elephant trunks, man. Oh shit, Amy. What the fuck? What is going on? What is going on, Amy? Oh, guys, I think she's about to go here, man. Shit is about to go. Oh, fuck. Dude, like 100,000 in volume, man. Oh, man. Oh, man. Okay, I like this. I like this. Oh, Amy. Keep it going. Dude, GameStop is fucking going too. Shit. Shit. Oh, shit. Bro, if we hit 22 today, I'm fucking down. If we hit 22 today, I'm fucking down. Alright? Do it. Don't let us down, Amy. Keep it going. There we go. Nice little elephant. Okay. Oh shit, what are we doing? What are we doing? Gotta draw little eyeballs, you already know. Elephant trunks for days. Give me that background, baby, come on. White. Oh, these gotta be black, hold up. Black here. Black here. And white background. There we go. Alright, what else do we got? Okay, black here. There you go. There, clone that guy. Oh yeah. Oh yeah, there it is. Alright, we need a little elephant ears though. Okay. Here's one. crazy elephant here. You know what? I don't care. Alright? Hate on that shit. Going up right now. There we go, there we go. It's a crazy elephant. Oh no, no, no. Whoops. Oh yeah, he's crazy for Amy, alright? That's what it is. Come on, Amy. Let us down. Okay. Fix the eyes? I got you, dude. Whoa! Whoa! Whoa, 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 whoa! What the fuck was that? Whoa! Did you guys see that shit? Look at this candle, bro. Sorry, dude. Ah, fuck. Oh my god, what the fuck? Yo, what the fuck was that? What, baby? Oh, we need the truck. Hold up, bro. There we go. Guys, that candle, man. Oh, this one's the wrong color. There we go. It's one of those fake out candles, man. Here we go, here we go, here we go! Hell yeah, baby, come on, push! Push that shit! Push it! God damn it, Amy, come on! Let's see. Oh shit! Guys, look at how sexy this looks on the daily chart. What? That looks real sexy, dude. Come on. Wow. Here we go, here we go. We need candle licks. Where's the tongue at? Yes. Come on, scream at that shit. Scream at Amy. Tell her to go up. Come on. $13.98. She's trying, man. She's pushing. It's 11. Yo, make sure you hit that like button if you want Amy to go up. Right? We need more fucking people like you in here so we could rally it up. So we could rally it up with Amy, bro. Come on. Get it to 420 like you did last time. Get it to 420, bro. Come on. Alien, I missed you too, bro. I missed you too, bro. Yeah, I really did miss you guys, man. This was a long week for sure. Without the chat, man. Without the chat. Not good, but hey, we're back. We are back and we are fucking rallying, bro. Right there. That's right here. We need to fix his mouth. Come on. Alright, yo. Let's do something real quick. You already know how I beat, man. We look at the charts when AMC is just trading sideways. We look at the charts. And then we rally. And then we rally. What is good, Amy? What are you doing? Okay, yeah, dude, this candle, super weird. Super weird candle that happened here on the 1 minute. Um, that's it. Clocking, man, clocking that algorithm, that threshold that it has, right? This was probably not supposed to happen, and it did anyways. Ooh, I like that. I like that a lot. Okay. So we got a little flag formation right here. See if we break that and keep pushing up. This is also pressure building up, okay? So typically when you see something like this, this thing does keep ripping. You see the pumps and dumps happen very quickly, like, you just trading, you pump, and then you dump, right? But this is pressure building up, which to me seems like pretty bullish. And then also this candle, right? This candle pushing up. So depending on what the SPY ends up doing here in the next couple of minutes is really going to tell Amy, right? Now, if we start trading inverse to the SPY, we have negative beta. That is also a good thing. Saying we'll break completely away, we'll do our own thing, and we'll just keep pushing up. But this thing, I mean, it's been building up, dude. It's been building up. Let's see what level we're tracking here in the short term, because we already crossed just today. We crossed one, so the next level we have to cross is this 1471. Now, this is where things get a little bit tricky, right? Because if we don't cross this, that would be a rejection here on the first level of resistance. Okay, if we do cross this, I see this thing going straight up here to touch this $16 level, because that's already 2 in 1 day, followed by this pressure here, and you start to see this, also this on the macro of things crawling back up, which is an indicator, right? You got your little projector that we were just talking about. Sparse pattern, where is it? It's gonna be on this guy real quick. Hold up. We were just talking about this. I'm going to take the elephant out for a sec. Where is it? It's right here. Is it that one? No, it's not. Did I delete it, bro? Okay, I don't know where it is. It's the November run-up. The November run-up is 2 projector patterns before, ripping away. Here, I'll pull it up. Maybe that'll give us good insight here. And it's followed by a downtrend too, which is literally AMC right now. It's a downtrend and then it fucking pops. See this shit? See that shit right there, bro? That's what I'm saying. So, not that this is not impossible. It's not as likely, right? But it has happened before. Now, what I was saying earlier is that the reason this was more likely before was because the price action, the price levels we were dealing with were in the low numbers. $2-3 compared to where we are now. It's a little bit harder to bring the price up volume wise. So the volume is increasing anyways, but how we were saying that we have to cross certain levels to stair our way up. So that's why I'm a little bit skeptical about a push like this, in the short term. But it's not impossible. It's just not the most likely scenario, right? All right, we're gonna take this guy away, go back here to the minute chart, and take a look at Amy. What is she doing? Okay, we broke down from this little flag. Or no, we haven't yet. We're still in the making. Okay, what the hell? All right. All right, here's the break. Here is the break. Break is here. Hey, baby. Let's get it. Let's get it. Let's get it. Let's get it. Here we go. Oh shit. Oh shit. Amy. Alright, Spy's dumping, so. Yeah, the wizard for sure, man. For sure. You know, some people get pissed off. They're like, "Yo, why are we rallying, bro? Like, we're up like 50 cents or we're up 10 cents." I'm like, "Dude, we rally cuz like that's what it's about, man. Like who cares? Like if we go up 10, 5 cents, we're still going up. All right? And yeah, we rally on the way down too cuz that's what it's all about, dude. What do you mean? That's what it's all fucking about. Damn it. I don't know why, but yeah, there's a lot of things just in the way. Guys, remember something too, okay? When AMC goes up, you see a lot of, like this, and this is how they do it. I'm telling you, man. Bring in other meme stocks into play. You can count on any, okay? But I see this happen over and over and over again. But look what the fuck is ripping right now as we speak. CEI. Just as soon as, and look, I can compare it with AMC. All right, you can say it's not like, you know, coincidence or whatever. I don't agree with that. I do believe that these two, you know, stocks in general will track inverse to each other. Meme stocks. Okay, you got one going up as one goes down. Literally, AMC on top, CEI on the bottom, just going up. So just consider that when we do this, right? We did it with Mullen. I had talked about this with Mullen. You started to see AMC go up in the morning, and then Mullen started to rip as AMC was coming back down. So these are things you have to consider, and not, you know, again, just be mindful and careful, right, with the price action if you start to see another meme stock being pumped, because institutions are also shorting these other meme stocks. Okay? All right, there goes the Spidey Spy. This might be a good thing if we track inverse to it. If we don't, then be careful, because the Spy is going pretty hard to the downside right now. Like, pretty fucking hard. So, be careful. Not financial advice. Unless there's, like, a massive V reversal, right? As the Spy likes to do. But we did just cross one level of support here. And if it's coming right for the next one, if it keeps going very quickly and it crosses this one, then it's going to come to this one, right? And, well, if we cross that, then this thing is probably going to dip pretty hard, okay? So, be careful. And that is, remember, when it dips, the correlation this has with DWAC is pretty strong when the Spy dips. When the Spy dips, we have seen DWAC rip, okay? Any news on the Spy? Anybody know? Did Gensler speak already? Gary Gensler. My man. Not my man. No. When does he speak? When do you think if Gensler decides to restrict payment for order flow? So, see, that's the thing, all right? Consider this as well. Yesterday there was a headline that came out and said Gary Gensler could restrict payment for order flow. It doesn't say will, right? That's the news that is brought to you. Now, you can take that however you want. Could does not mean will, again. So you have to be careful with that, because if he does not do that today, that would technically be a bearish thing in the short term for AMC and GameStop, because if things have been priced in already, right, and you have these pumps and stuff and people taking advantage of that, shorts taking advantage of this opportunity here, then you will see the algorithm behave, gravitate towards behaving back to normal, right, with the selling pressure that comes with it, right? People selling because they didn't get the news that they wanted. So, if he does talk about restricting payment for order flow, and he does, do that, then I would see that being a potential, like, major catalyst to pump AMC and GameStop, right? Because that is a major catalyst. That's a major catalyst. So we'll see what happens. All right, there goes the Spy faking out again, doing its little fake out bullshit that it always does, which is just V reversals, right? If there is a confirmation here, it would have to come all the way up here for that to be the case. If not, then it's going to keep dumping. But we'll see. See how many times it's done it today. 1, 2, 3, 4, and maybe 5. We'll see. It's at 2. Is it at 2 today? Gary Gensler. Where is he? Is he going? Where is he talking? Oh, he should be on right now. I thought it was 12:30 Eastern, which is now.
I know we used to do this during the
Oh
bombing
shit,
years
he's
together,
live now. What the fuck?
and with
Okay, hold up, guys. Gary Gensler's live
COVID,
right now.
it's more remote. But
Fuck.
let me just say, as customary, I'd like to note my views are my own, and I'm not speaking on behalf of my fellow commissioners or the SEC
I'll put it
staff.
live. Hold up.
Rich, last year, when I spoke at your conference, you and I spoke about how technology was transforming and will continue to transform our equity markets. And this has led to some good things, of course. I mean, for example, retail investors have greater access to markets than any time in the past, and many other things in our equity markets. But the technological transformation also has led to challenges. And I would note challenges around market segmentation, challenges around market concentration, and yes, potential inefficiencies in the marketplace. So right now, you see, there is not a level playing field amongst
hold
the
up.
different
Let me get
parts
this right.
of the
Hold up.
markets. The wholesalers,
Gary
the
Gensler's
dark
live.
pools, the lit exchanges, what one might call market centers. And so further, the markets have become increasingly hidden from view. Just quoting a Financial Times article earlier this week, in 2009, off-exchange trading accounted for 1/4, 25% of U.S. equity volume. Last year, during the meme stock events, that share swelled to a peak of 47%. So from 1/4 to nearly half. What's more, thinking about retail, the retail public, and particularly retail marketable orders, 90+% of retail marketable orders are routed to a small, concentrated group of wholesalers that pay for the retail market order flow, and institutions around the globe aren't competing. It's that small group of wholesalers. So it's not clear with such market segmentation and concentration, and yes, with an uneven playing field, that our current national market system is as fair and as competitive as possible for investors. And in a recent report last year, the SEC walked through that meme stock events of January of 2021. And the staff described 4 areas to consider of interest in promoting our 3-part mission. You know, investors on the one side, issuers on the other, and then fair, orderly, and efficient markets in the middle. To date, the commission has released 2 proposals regarding 2 of those. I'm not going to discuss those today: shortening the settlement cycle, the plumbing, and also enhancing short sale disclosures. A third thing in that report from last year was about digital engagement practices, what some people might call gamification. We put a request for comment out on that in the fall. Today, I'd like to focus on the 4th aspect that was in that report, and that was about trading in dark pools and through wholesalers. We have not updated key aspects of our national market system rules, particularly related to order handling and execution, since 2005, 17 years, a lifetime in equity markets, and even, Rich, for you, a lifetime in Piper Sandler conferences. I think then it was Sandler or Neal conferences, but maybe it was a firm even before that for you. So last year, I asked staff to take a holistic, cross-market view of how we could update our rules to drive greater efficiency in our equity markets. Helps investors, helps issuers, if the middle of the markets are more efficient. That which you cover each year in these conferences. I'd like today to discuss work across 6 areas: minimum pricing increment, national best bid and offer, disclosure of order execution quality, best execution, order by order competition, and payment for order flow and related exchange rebates and access fees. So let me try to do it quickly, because I know, Rich, you're going to have a bunch of questions. Minimum pricing increments. Today, we lack a level playing field amongst the different trading venues: wholesalers, dark pools, lit exchanges. There are many disparities between these 3, but particularly let me mention something about tick size. In the lit markets, investors see prices in 1-penny increments. We're familiar with it. Rich, you and I grew up when it was wider. Wholesalers, though, can fill orders at sub-penny prices and without open competition. It's not level. And more than half of the share volume in the first 5 months of this year was in stocks constrained by tick size. I'm talking about on these exchanges. And in contrast, sub-penny trading, including a tenth of a penny, so 1/10 of a penny, accounts for 37% of the share volume executed off exchange. Given this activity, I really wonder why this lit exchanges should have that 1 penny constraint when the off exchange does not. It raises real questions about whether this structure is fair and best promotes competition. Why not allow all venues to have an equal opportunity to execute at sub-penny increments? Therefore, I've asked staff to make recommendations for the Commission's consideration around leveling the playing field with respect to 2 facets of tick size. First, possibly harmonizing the tick size across different market centers, such that all trading occurs in the minimum increment, regardless of market center. Second, given the sheer volume of off-exchange sub-penny trading, as well as the currently allowed on exchanges, retail liquidity programs go down to 1/10 of a penny in these RLPs, possibly shrinking the minimum tick size to better align with that which is happening off exchange. So that's first, tick size, leveling the field. National best bid, best offer. The NBBO, as it's called, is a quote designed to aggregate information across the different exchanges. It provides investors important pre-trade transparency, and then those shares are subject to what's known as the order protection rule. I've asked staff to consider 3 issues related to the so-called NBBO. And the question is really what's included, what's excluded from the NBBO? Is it a good measuring rod? Is it not a good measuring rod? So first, the NBBO currently includes only what's called round lots, as you know, quotes of 100 shares or more, has for decades. That seems to leave out critical gaps. Staff calculations using trade and quote data found that odd lots, less than the 100, increased from about 15% of trades in 2014 to more than 55% of the trades in March of 2022. This has a lot to do with the transformational times we live in technology and what's going on. It also has to do with some average share prices moving up. Retail investors, the very investors who are more likely to buy and sell at odd lot prices, are unable to see the prices. Sophisticated folks can see the prices of the odd lots more readily, but not the retail public. And in 2020, the Commission adopted something called the Market and Infrastructure Rule, which was recently upheld in court, I might note. And this rule created a new round lot definition, which, depending upon share price, the round lot could be between 100 shares and 1 share, had increments. It also added odd lot information to what was called the core market data. So under the transition schedule, under that infrastructure rule, though, the implementation of the new round lot could take several years, maybe even many years. And therefore, I've asked staff to consider whether we go out, notice and comment rulemaking again, and accelerate the implementation of this new round lot definition. The infrastructure rule also included quotation information about the remaining odd lots, even those odd lots less than the 40 or 20 or 10 of the new definition of round lot. So I've asked staff whether we should consider also accelerating that information about odd lots into core data. Together, I think accelerating both of these timelines would allow retail investors to better understand prices sooner. But there's a third thing I want to say on this, is I've also asked staff to consider whether there should be an odd lot best bid and offer so that investors would know the best price available in the market regardless of share quantity. Third, disclosure about order execution quality. You might be familiar with a rule that's been in place for about 20 years that allows retail investors to understand and compare execution quality across these market centers. But today, retail investors cannot compare execution quality across brokers Yes, for market centers, but not their brokers. And that's because this so-called Rule 605 only covers market centers like the dark pools, the wholesalers, and the exchanges. Moreover, the rule is 20 years old. So I've asked staff to make recommendations on how the commission can consider we might update this. 22 years is a long time in these markets, and that investors could receive more useful information that could include mandated the broker dealers along with the market centers file some monthly reports on 605, and further that there be some consideration given to requiring all reporters, market centers and broker dealers to provide summary statistics of execution quality, such as price improvement as a percentage of the spread. Fourth, let me talk about best execution. You might be familiar with it. Right now, the Financial Industry Regulatory Authority, FINRA, the MSRB, the Municipal Rulemaking Board, have rules on best execution, but we at the SEC actually do not. These FINRA and MSRB rules require that broker-dealers exercise reasonable diligence to execute customer orders in the best market so that their customers, not them, but their customers receive the most favorable prices under those prevailing conditions. I think investors might benefit if the SEC also considered proposing a rule about best execution. And in addition, broker-dealers and investors might benefit from more detail around the procedural standards. See, FINRA, MSRB, 22 years later, there's been a lot of questions. So why not provide better details on procedural standards brokers must meet when handling and executing customer orders? So I've asked staff to consider that as well. And not just for equities, but for other securities. Best execution, whether it's in corporate bonds or elsewhere. Fifth, got a little press, I guess, this week. Order by order competition, I want to talk about. Competition promotes efficiency in markets. We know that, but it also sort of takes away potentially some economic rents or excess profits above market competition that might otherwise accrue. And yes, Rick, it might be some of the people in the audience. There's a trade-off. Investors and issuers benefit if there's less economic rents in the middle, and there's sort of the full benefits of competition transparency in the middle. So as I've mentioned, the vast majority of retail marketable orders are flowing to wholesalers, plus 90% to a small handful of wholesalers that pay for order flow. And what's more, this segmentation means that institutional investors, such as pension funds and others, don't get to interact directly with that order flow. This segmentation, which isolates retail market orders, may not benefit the retail public as much as orders being exposed to order by order competition. And some have suggested, I've heard it, that the segmentation with the isolated segmentation allows retail investors to receive slightly better prices compared to the MBBO. But as I mentioned, the MBBO is not a great measuring rod. And what's more, this price improvement doesn't say that that's the price improvement that would be available with full order by order competition. So it's not necessarily the best price. It's just price improvement versus actually a measuring rod that's got a lot of gaps in it and doesn't necessarily have the full benefit of order by order competition. So I've previously discussed the MBBO, but in addition to that, I've asked staff to make recommendations for the commission's consideration around how do we enhance order by order competition. Now, this may be through open and transparent auctions or other means. It may be saying that investors get the midpoint or better, and then there might be this auction mechanism. If not, we know that the listed options exchanges have operated auctions for retail orders for many years. I've asked the staff in consideration of any recommendations for cash markets, stock auctions, to draw upon the lessons from the options markets and focusing on how do we assure full competition amongst all market participants to provide the best prices for retail investors. Last, let me close on a topic that's probably also gotten a fair bit of discussion: payment for order flow, and I think the related exchange rebates. And of course, there's access fees related to that. Payment for order flow can raise real issues around conflicts of interest. Exchange rebates can as well. As described in the Commission's settled enforcement action against Robinhood in 2020, payment for order flow can distort routing decisions. Certain principal trading firms seeking to attract Robinhood's order flow told them that there was a trade-off between payment for order flow and price improvement for customers. And I would note, not all brokers pay for order flow. And many have said, well, what about zero commissions? There are zero commission brokers that are not paying for order flow. So zero commission doesn't mean zero cost to the retail public. And it comes back to how much of the price improvement is being shared with the retail public versus staying with the wholesalers in the dark markets. So as the staff reported in the GameStop report, payment for order flow may incentivize broker dealers to use digital engagement practices, another project of ours, gamification, to increase customer trading. The European Union is actually actively considering banning payment for order flow, joining other regulators from the United Kingdom, Canada, and Australia. Exchange rebates, as I said, also present conflicts because exchanges give rebates to traders, and in particular, high volume traders benefit more from these arrangements than lower volume traders. And we often talk about high volume price discounts, but here we're getting a lot of orders routed through the biggest market players that small brokers are routing through large brokers trying to get some of that discount, and the large brokers are getting to see that flow and getting discounts and the like, leading to greater concentration, I would note as well. So just like payment for order flow presents a conflict, routing of marketable retail orders, exchange rebates may also present conflicts. So thus, I've asked staff to make recommendations around how we can mitigate the conflicts with respect to both payment for order flow and rebates. And one thing I've asked them to consider is whether exchange fees, what somebody pays to access the quotations on the exchange, and rebates should be more transparent, just making them even more transparent so investors can understand these amounts at the time of the trade execution. Finally, I've asked staff to consider how the access fees might change in light of the potential lowering of minimum tick size. Minimum increment, a penny. Access fees right now, 30 mils or 3/10 of a penny. That proportionality, what should happen with that? If we reduce the minimum pricing increment, it may also be appropriate to reduce these access fees. Of course, that would relate to these rebates as well. So let me just say, Rich and audience, in conclusion, I think we at the SEC need to look for opportunities to freshen up our rules to ensure that America remains the gold standard of the world's capital markets. Nothing stands still. Technology is rapidly changing. And so we can't take our leadership in capital markets for granted. And we really fundamentally haven't updated our rules since 2005, other than the infrastructure rule and data that I mentioned earlier. And as they continue to change the face of markets, technology, business models, and like, we have to look out for the investors on the one side and the issuers on the other, and particularly retail investors, as there's more retail investors in the market than ever before. It's not clear, given the current market segmentation, concentration, lack of level playing field, that our current national market system is as fair and as competitive as possible for investors. I think we can do better here for retail investors. I thank you. And Rich, I turn it over to you.
First, Chair Gensler, thank you for addressing my audience here. What you just outlined is certainly impactful to a number of the wholesale brokers, exchanges, and e-brokers that are present. And I also just want to commend you for your commitment to keeping rules up to pace with the technology, which we know there's been a lag. So with that, I'll get into a few questions here, if you don't mind.
Absolutely.
First, you've outlined sweeping changes, which we just heard. And in equity market structure, you've emphasized this order by order competition. So Could you give us a better view of what that order-by-order competition might look like? And then also, what wasn't expressly clear to me is payment for order flow prohibited, or would payment for order flow still be able to exist in this order-by-order competitive environment?
Look, I'll say this, Rich, I don't want to get ahead of my fellow commissioners or the staff. I thought it would be helpful, seeing that you invited me to this speech, to sort of put out there what we're considering. So on the order-by-order competition, it's really what I've asked staff to focus on is for retail marketable orders. How can we inject greater competition so the segmentation is not isolated segmentation? Right now, 2, 3 wholesalers are buying that payment, buying that order flow, not competing order by order. Yes, there's some price improvement, but not as much as you can see in these 605 reports and other reports in terms of the realized prices in the market. And so injecting greater competition through an auction mechanism, learning, of course, from the options, what works, what doesn't work in the options markets, and other groups of staff are actually thinking about possibly what to do there. But I don't want to get ahead of that. In terms of payment for order flow and rebates, as I say, they present inherent conflicts to the market. 3 other jurisdictions and a 4th, a big one, Europe, is considering getting rid of them. So I continue to ask staff, what should we do there? But as we put this all together, we're going to put it out to notice and comment, and obviously hear from the public as well.
Understood. Thank you, Chair Gensler. The next is and you sort of alluded to this, many regard the U.S. retail markets as highly efficient and even the most efficient in the world, what some would say. So I guess the question is there any data to suggest that the auction process will be better or result in an economic benefit, or do you plan on doing any pilot tests? And just one last part to the question is, are you concerned that it could have an impact on the low pricing and nil pricing that the e-brokers charge?
Let me just say this. I think it's misleading. There's a cost to retail, to this current system. And the cost is that 2 or 3 highly concentrated market makers are buying your order flow. And though there might be some price improvement against a false measure, a poorly put together measuring rod, NBBO, that doesn't mean it's a full price improvement. And it doesn't mean that it's best execution. So I think if we put in our rule set, not just FINRA's, our rule set, and put some procedures around best execution, we consider, put out to public notice, real auctions. So it's still segmented retail flow, but Rich, think about everybody on the other side, institutions that currently cannot access that retail flow. Is that the best capital markets? And so that's what we're going to put out. And yes, we'll put it out with economic analysis. Yes, we'll look forward to the public weighing in with their economic analysis, and we'll have the lively debate.
Understood. Understood. A little bit on the same
defensive
sort of questioning line would be, what is the timeline? We've heard the broad outline by you, but I suspect, you'd have to go to proposal, comments. So what is the real timeline behind what you're suggesting? And then would you be open to a roundtable to discuss, this is some highly controversial topics. Would you be open to a roundtable discussion, which the SEC has held in the past, and which—
Rich, let me just say this. There's lots of ways to get public input. We're doing it all along. Anybody who's listening to this and watching this, let us know what you think. This is not a proposal. This is a chair's speech. I'm not speaking on behalf of the staff or the fellow commissioners. I've said that up front. I really mean it. But weigh in, talk to us. When we put a proposal out, we have multiple ways to engage with the public. I feel that as a chair of this, it's a remarkable privilege to be chair, but I give speeches, I sort of lay out something, I try to say what we mean and mean what we say. We had a GameStop report last year, and we got a lot of comments in on that, informally and formally and so forth. So continue to engage with the remarkable staff at Trading and Markets and the Division of Economic Risk Analysis. And of course, engage with individual commissioners as well and their offices. And if we get to a spot where we propose something, I can't prejudge that, but if we get to the spot where we propose something, we'll hear more. And whether it's roundtables or meetings, it's really important to get the public's input.
Thank you, Chair Gensler. One last question on equities, and if you don't mind, I have a question or two on crypto as well as fixed income markets as well. Because
gosh, I figured as much, Rich.
It's in my allocated time, though, Chair. So first question, just last question on equities. You mentioned the SIP infrastructure proposal, that was upheld by the courts, the DC courts, and that you'd pick one, I think it was the odd lot, about publication of odd lots. So what do you expect to implement the SIP infrastructure proposal in the broader outlines over the next year or so? Right?
Rich, I don't remember the exact dates that are in that rule, but it's now been upheld. Of course, the litigants will have to decide what they do, but there's a various serious that was a unanimous vote, by the way, at the commission 2 years ago, and it was to it's basically similar to what I'm saying here. It's how to use the benefits of competition to drive greater efficiency in our capital markets. That was competition a bit around market data and driving some efficiency in that infrastructure rule. But you're right, I did mention two aspects. The definition of round lot and the inclusion of odd lot data and core data that I've asked staff, should we go out to? Again, it would be notice and comment rulemaking, but notice and comment to accelerate those two aspects earlier, along with the other potential reforms I'm talking about here.
Great, thank you on the equity. Now, if I could follow up on crypto, these are general questions, Chair. So just recently, a bill, I believe, has been floated by Senator Loomis of Wyoming and Senator Gillibrand.
Senator Lummis.
Lummis, excuse me, and Gillibrand of New York, sort of broad outlines of regulation for crypto. And I guess the question is, first, what's your broad impression? Second, just, if you can't answer that, which is doubtful, but what's your overall view on the need for regulation in crypto? And then how well the bill, from what we understand, divvies up responsibilities of regulation to both the CFTC and SEC. How well do you think you can work together to actually execute on regulation of crypto?
So there's a lot you packed in there, and I've had good dialogues with Senator Lummis, and I've known Senator Gillibrand for years, and certainly worked with her very closely in the Obama years. But whatever comments I might have, I'm going to share with them, not with you and your audience now. And I really haven't reviewed their bill. It was released yesterday. But let me go to a broader sense. Crypto, this speculative asset class, $1.25 trillion roughly dollars right now, does not have the investor protection that the public needs. And I would contend, if this field has any future, what the field needs as well. And there's three sets of big public policy issues. It's investor protection, which the Commodity Futures Trading Commission and the Securities and Exchange Commission is kind of, our domain. I'll come back to that question. There's the issues of financial stability and money creation around stable coins and the like, that the banking regulators, Treasury, we have some role in that as well, because many stable coins look like money market funds. Many algorithmic stable coins, really are. under our Howey test, very similar to securities or our investment contracts, what it's called. And then thirdly, illicit activity and how we guard against the use of these coins to circumvent the public policies around sanctions and illicit activity and ransomware and the like. So there's a lot going on here to unpack, but I would say most of the tokens, thousands of tokens, have an entrepreneur in the middle or a group of entrepreneurs in the middle raising money from the public, and the public's anticipating profits based on that. That's the core of a definition of an issuer-based securities regime. That's what the SEC was asked to do in the 30s, painted with a broad brush, Thurgood Marshall's words, not mine, to protect the public against sham and fraud. I had the honor to chair this CFTC, another great agency focused on derivatives, and particularly derivatives around commodities and so forth. Ours is an issuer regime, protecting the public when a group of entrepreneurs should disclose something to the public. And you're a research analyst, Rich. You know how important that disclosure is. And to get that disclosure, make sure somebody's not lying to you, defrauding you, not trading on insider information. That's what we do well at the SEC.
Gotcha.
And so most of these tokens are actually, right now, I'm not prejudging any one of them, but right now, they're investment contracts, they're securities. And thus the trading platforms, the ones that you cover with great interest, some public, some private that want to be public, those trading platforms should come in, work with us. I've said this publicly, we're willing to think through how to use our exemptive authorities. And basically, we've got these projects: registered crypto markets, registered crypto intermediaries, and yes, registered tokens. We are also looking very closely at the stable coins because, frankly, they look a lot like funds and how they're operating. And guess what? They're offering yields, and sometimes they call them rewards, sometimes they call them yield. That's a return on something. So we've got all these projects. But Chair Benham and I have talked off and on about how we do something, enter into a memorandum of understanding, because some of the tokens are commodities, Bitcoin being one of them. So there's a lot here to work with the bank regulators, work with Congress if appropriate, moving forward. I know I went on a little bit.
That's fine, Chair. If I had to echo anything from the management teams of the crypto companies that presented here today, is they just want clarity from a regulatory
Well, it's good. If you want clarity, I say this, and I can say your first names pretty well, but I won't because I'm always told not to. But I know most of you, I've met with most of you, is work with us, come in, because otherwise it's just, you've got securities floating on your platforms and you're right now operating outside of the law. And that's what we have a robust examination and enforcement units. It's half of our staff at the SEC between exams and enforcement. But work with this and think this through. And I will say this also, some of the traditional incumbent exchanges that are not yet there, they're working with us. So the crypto exchanges that are potentially operating outside the law, it'd be better to work with us too. And I think you'd want to say that as a shareholder, Rich.
I would probably agree, Chair. So last sort of category of last question, I might have one follow-up, of course, but in regards to fixed income, in a recent speech, you outlined, how big the fixed income markets were, how important they were, in comparison to the equity markets. And, you highlighted post-trade transparency, the platform reforms, and resiliency. I'll keep this at a high level, but what was you outlined reforms in each area. We won't get into detail here, but what's your overall goal in trying to regulate, I guess, the fixed income markets?
So I put it in a nutshell. I've been blessed to serve now 3 presidents, and it's a remarkable privilege. I'd like to be able to look back and say we made our capital markets even stronger. And I think of it in terms of efficiency, that in the middle, how we price and allocate capital and risk in our system. It might sound geeky, it might sound a little bit finance oriented, but unless we do, Rich, other countries will surpass us. It is part of our great success as a nation. We have a rule of law. We've got an innovative population. We've got so many great attributes. But one of the great attributes is this system of what I'll call transparent, regulated markets. And I think it's part of our geopolitical success. But I wouldn't take anything for granted. And when you see concentration and segmentation and lack of level field, as we see in the equity markets or over in the treasury markets, that we see so many times our central bank has to come in and basically hold kind of what I'll call the left tail risk, the risk that the market has jitters. And we had it in 2020, we had it in 2019, we had it in 2014. If you watch your history, you can find 3 or 4 events in the early 80s. You can find event after event. Can we make that market, the treasury market, more resilient? And then in the broader fixed income, more transparent. And so, yes, we've been working with FINRA and trying to revise the trace reports, not only to be shorter and more timely, but also to inject more relevant detail in the corporate bond market. And yes, working with our colleagues at the Treasury and the Federal Reserve about post-trade transparency in the Treasury market. But the single thing that sort of animates me is in this honor to be in this role is how do we sort of, in a rapidly changing technological world and a lot of global competition, how do we ensure that our capital markets in the middle has fewer economic rents, greater competition and transparency and efficiency, that the buy side can compete with the sell side in those fixed income markets and really compete? We get the principal trading firms, the high frequency trading firms, so to speak, registered so that but once they're registered, then there's more of a way they can compete in the middle, even with the prime, what's usually called the primary dealers. I went on a little bit, but it's all about trying to drive greater efficiency in a geopolitical competitive world.
Thank you. One last follow-up on the equity markets, because someone has brought this question to me. Would the auctions cover or preclude, say, large banks that have internalization of orders, that internalize a customer order with their own trading desk? Would they be included in this auction?
Again, I'm not trying to prejudge the staff and where we might come out and everything, but I thank whomever asked the question for the question, and I don't want to prejudge that. I want to thank you again and all your audience. I want to thank you because I know that you didn't start in a career in finance. You started at West Point, if I remember. And but we both went to Wharton. You're very analytic. We're analytic. We're going to look at the economics. And the reason I'm closing this way is we benefit if the members of a conference like this give us feedback, give us input. If we actually put something out on the equity markets, give us feedback. But of course, we've already put out a lot of things on the fixed income markets. We've put out things on shortening the settlement cycle. Give us feedback. Economic ground truths really help. Know that we have a little bit different role. We're representing 330 million Americans. You're representing your clients, your customers, your shareholders, frankly, your revenues. So we might have a little bit different perspective, but we really do benefit from the hard analytics that a guy like Rich Repetto is so good at, and the economics matter.
Chair Gensler, I want to thank you for your commitment to transparency. Thank you for your commitment to keep investors, there be plenty of debate, but keep people informed. What I would say, Chair Gensler, and if I respectfully call you Gary.
They call me Gary, of course. You have for years.
You've been a force as a regulator, no matter what job you had. So you've truly been a force, and I respect that. And I think there'll be debate, but we respect, your effort and the time you put in to try to get the things done, to get to execute on your job as the SEC commissioner.
I don't know. You're. Thank you for the compliment. It was probably Sam and Jane Gensler's work, and you might know I'm one of 5 kids, and I've got an identical twin brother, and it's just you had to be fast around the Gensler dinner table.
And a former MIT professor of crypto as well. So
anyway,
thank you, Chair Gensler. We appreciate the update, and hopefully we'll talk to you soon. I won't ask the question, will you come back next year? We just hope to talk to you again soon.
Rich, I know what it is. You always want me back if I'm still in the job. But like 6 years from now, will you be asking me back?
No, that's not true. I did ask you when you were at MIT as well. So I believe that when you were a professor. But thank you, Chair Gensler. We appreciate your time.
Thank you.
All right. What the fuck? Could restrict payment for order flow. Did not restrict payment for order flow. We'll see what happens with the price action here in the short term, right? I mean, see how it reacts to the catalyst, right? Remember, here, I don't put too much attention. I don't give too much attention or consider too much the fundamentals or catalysts of AMC, whether that, that's the SEC, Gary Gensler, anything. I put very little faith in anything like that, just because we've seen how this works, guys. The news that gets released, it's very correlated with the cycle and how it's not supposed to behave the way that people intended to, right? Like the whole June 3rd, right, major hype for June 3rd, the executive order that happened, right? That nothing happened with the price action of AMC, right? It's the same thing with stuff like this. So I put very little faith in that. We'll see what happens again with AMC here, but consider, right, also the SPY did take a pretty nasty dip here, so there might be a little bit more pressure, right, unless this thing just comes all the way back up here, right? It doesn't quite look like a V-reversal. It's sort of just accumulating down here before either making another gap down or a gap up, but we'll see. We're going to take a little break here, guys. If I start to see the price action move drastically, then we will come back here. But I just kind of see things trading sideways for now. We'll see how it goes. If it does come back, we start seeing major volume, you'll see me back in here. All right, guys? We'll see you soon. Bye-bye. I love you.